The U.S. equity market heads into the 4th of July holiday in good spirits, extending the record run with the S&P 500 finally testing that 3,000 barrier. The move continues to be encouraged by the bond market, with the 10-year Treasury yield dipping down to its lowest level since November of 2016. We continue to warn of the financial stability risk associated with this strategy that recklessly incentivizes one-way flow into stocks, especially with monetary policy accommodation tools and government stimulus measures so exhausted. This calls into question the legitimacy of the move and leaves the market highly vulnerable to any negative shocks to the global economy. U.S. administration trade policy is one of those things that could result in a negative shock, and while there was some positive news to kick off the week with the U.S. and China coming back to the negotiation table, we don't believe this should be taken as a sign of the administration backing away from its soft dollar trade strategy. On the FX front, things have been more mixed than anything else, with the major currencies, yen exception, selling off a little against the dollar this week. The pound relatively underperforming on the back of a horrid run of PMI data and renewed no-deal Brexit worry. All of this while the commodity block currencies have enjoyed gains against the buck, including a fresh 2019 high this week for the Canadian dollar. That's a dollar CAD low. Elsewhere, gold has retained its bid tone and has been well supported into dips since breaking out the other week above a critical range high from 2016 at 1375. The demand for gold is yet another red flag warning that the latest record run in U.S. equities might not be as solid as it appears to be. Looking ahead, trading conditions are going to thin out dramatically on Thursday and into the end of the week, with U.S. markets out for the 4th of July festivities. As far as Thursday's calendar goes, key standouts come in the form of Aussie retail sales, German construction PMIs, Eurozone retail sales, and some ECB speak. That's all for now.